Nobody gives you too much feedback, especially if you're a bootstrapped founder. And that transition is not an easy one. One of the things Rashesh and Venkat told me is that it will take 3 years. It will take 3 years to feel at home. And somehow at the 2-3 year mark, I started feeling at home. And once you start feeling at home, this whole notion of founder versus non-founder, I always say entrepreneurship is a state of mind. It's not a state of employment. If you incentivize the right way, which I truly believe I am, you will create value. And as I said, a lot more opportunities have emerged.
A part of Radhika Gupta's LinkedIn bio says, "I'm a girl on a mission with wings of fire." And I think that really manages to capture the essence of her personality. I've known Radhika now for maybe close to 15 years. And maybe in this very building that we're speaking, I've come and done interviews graciously given by her office for, Penn undergrad admissions, which I've contributed to, much lesser than Radhika, but I've done a few years of that. Radhika is now the MD and CEO of Edelweiss Asset Management, one of the country's most prolific and renowned asset management companies. Before which, she co-founded Forefront Capital, an alternative investment boutique, which was acquired by Edelweiss in 2014. That's what brought her to this building. She's a frequent contributor to publications like Money Control and Mint, recently published a book called Limitless, The Power of Unlocking Your True Potential, to much critical acclaim. What always strikes me about her is that she leads with a smile, truly sets the bar for what it means to be an empathetic leader and a highly ambitious one. Radhika, we're so pleased to have you on this episode of the Blume Podcast.
Thank you. And it's good to do something different in this building
No,
rather than meet for interviews, which is also nice.
Which is also nice. So thanks again. And I'm going to break this up into 3 parts, right? I'm going to talk about people in our tech community, which is primarily my audience, may or may not know of who Radhika is, what her history is, what drove you to become an entrepreneur. And you're one of 2 guests I have this season who are also uniquely folks who have built post-acquisition as well. And,
Yes.
moved and compounded there. So that was my draw to bring you on this season's episode. So definitely want to talk about how did that happen and how did the Edelweiss journey happen. And the theme for this year, as I've mentioned offline to you, is compounding. So there is various interpretations of it. Every entrepreneur has their own definition of it. Compounding happens in many ways, and I definitely want to double click on that. So I'll get started with a little bit of history. So obviously, you grew up with parents who have very distinguished careers, dad diplomat, mom's school principal. And I understand, at least from what research my team has done, that as a diplomat's daughter, you went to schools all across the world.
Yes, I did.
And you tell us a little bit about how, that unique experience shapes your worldview as a young kid and your choices after you've grown up.
It's an amazing background, Karthik, to have. I mean, I don't think I realized how privileged I was.
Yeah.
To have the opportunity to live in Pakistan, even though I was homeschooled for the first 5 years of my life, to grow up as a teenager in Nigeria, where day-to-day security was a problem.
Wow.
And there was no mall and you couldn't go buy clothes. And you had to find a way to get through. To be a high schooler in Italy. And I always say, you won't get this experience being a tourist because firstly, no one
Of
visits
course not.
Pakistan and Nigeria as tourists. But the ability to see so many different parts of the world, truly immerse yourself in the reality of living and building a life in these countries in a very short span of time, right? Because your time is limited in each of these. It's 3 or 4 years. And the ability to constantly move forward, which I think has perhaps been the most valuable lesson. So I am very comfortable with change. You put me in south of Sudan today, and believe me, I'll be okay with it.
Yeah. You've just lived through it.
I've just lived through it. You change me from founder to becoming part of another company, back to founder again. I am cool.
Yeah.
So I just think the comfort with change, the ability to move on, that almost thriving in chaos
Yeah.
comes from being a diplomat's child. We were just so comfortable. I also think it gives you an inherent sense of optimism.
Yeah.
And a mentor of mine once told me that, leaders fundamentally have to be optimistic because nobody wants to be led by someone who's cranky about life and doesn't have anything to say.
Correct.
So I think this gives you a fundamental sense of optimism because that's the only thing that will carry you through.
No, fantastic. No, I see parallels of this in army kids. Someone who's been a son of a state bank, employee and has had to move 12 cities in 16 years. And there are traces of all of this. So thanks for sharing part of your personal early life. And then you ended up going to school in the US. Clearly, you made a choice, like most others, to say, hey, McKinsey is the gold standard. Let me start there. And then you joined a hedge fund. So what impacted those early choices in terms of, and there's some reference to campus placements being a tough time. And when you reflect on that, I think 3 parts or subsets to the question. So how do you reflect on that phase? There's always that difficult phase. What did it teach you? And then when you made these choices, what did success, money, and career and things like that mean to you in those early years? Because I'm also trying to understand how it shaped your entrepreneurial journey.
I think my early choices look a lot more thought out than they were, to be honest. But I was brought up in a home with no private sector background. In our home, people knew the difference between income tax and PCS and IFS and what a joint secretary and an additional secretary was. But if there was a conversation about the difference between banking and consulting, it was a blank.
Correct.
And so you have to understand that background. So it's a very different world for us.
Yeah.
And so my initial choices were just figuring it out. It was almost like Goldilocks is sitting in multiple chairs and figuring out what is just right. So I had a little bit of a tryst with technology in Microsoft as a summer intern. And I said, because I was a dual degree, so I did business and I did engineering. So I had a range of options.
Yeah.
And I said, okay, maybe technology is too technology. And then I did consulting, which seemed like a broad enough place to get started. And then I said, maybe this is a little too generalist for me. And then I joined a hedge fund because AQR Capital was founded by Cliff Asness, who happened to graduate from the same program at Penn that I did.
Understood.
And he said, come on board. And this is a finance firm, but it's a quant finance firm. So it's a great chance to sort of apply your background, both sides of your background. And that's really how I joined the asset management industry. And I say, I found my Goldilocks there. And really, the reflection is for many of us, that is how you find the initial starting point of
That's
your
right.
career.
You have to start somewhere.
You start somewhere and you figure
every
it out.
experience teaches you something.
And, the experience helps you find the answers. I think your second question on success is very interesting because I do believe my definition of success has evolved a lot in the last 17, 18 years of my career. It was a very traditional definition in the early days. My purpose was literally, I was a middle class kid who went abroad and literally wanted a good job with a good brand. Now it has transitioned much more to the joy of creating impact at large. But it's been a definite transition in how I see success.
No, absolutely. I think it happens to all of us. But that said, I know you're saying that now, given the position you've reached, but there seems to be an interesting turn or twist in the tail, maybe coincided with the global financial crisis. But what then, given all of those heuristics, and you were not like much older or super mature at that point. Maybe you were mature, but 3 years or 4 years into your job, like how do you make this call that I'll come back to India, I will start like a boutique investment firm? At that juncture, how did that translate into necessarily this bold vision that that you arrived at today, let's say?
I think coming back to India and turning entrepreneur is still date the boldest thing I've done. It's a big move in the context, as I said, personally, of someone who had never lived in India.
Yeah.
That was not Startup Central. That was not the era of Shark Tank. And it wasn't a celebrated time to be a founder.
Yeah.
And financial services is a different kind of business. It's not an easily funded business.
Yes.
It's not a traditional and, contrary to my belief at 24 that when you're a Wharton graduate coming back to India, people will rush to give you a lot of money to manage. None of that really works. So it's a very unconventional move. I think from my lens, and as I try to decode the decision, when we saw India sitting in 2008 and 9, we just saw India exploding between 2003 and 7. capital markets were really coming up. My father has always been a very patriotic man. Incidentally, Edelweiss, and I don't know what the strange karmic connection is. He would
Mm.
always tell me, one day you should come back to India and work for a company like Edelweiss. And I was like,
Oh.
it's bizarre. I think they had just had their IPO,
Ah.
but there was no other connection.
I
I was like, okay, I didn't even Google what Edelweiss was. I mean, there's no
But it's
connection.
amazing that reference came up.
He said that. He's
Mm.
like, look at these guys, look at what they're doing.
Mm.
And so we just saw India
Mm.
as an emerging place to come back and start up.
Mm.
The reality is also, Karthik, that if you wanted to start up in financial services,
Mm.
because penetration is so low,
Mm.
you could start a lot of things. I mean, I couldn't imagine starting up a hedge fund
Yeah.
in the US.
Yeah.
But taking those ideas to this market, which is what a lot of companies have done,
Yeah.
seemed like a real possibility. And that's all that drove the decision. And then literally building
It's similar to sort of my dream of coming back, in the sense that you could be someone who could have put in another 4-5 years, got your green card, and attempted to get into venture or start like a
Yeah.
young firm. You lost in the milieu. Like, when people ask why did you come back, I said, like, you're one of 750 graduates in a year out of business school.
Yeah.
You're a commodity in the US. Here you have all the tools and networks and the advantages, unfair advantages that no other place would give for what you work towards.
Yeah, you're living in an economy that's the center of growth. As you said, you have all the advantages. And people always ask me, if you earn the same amount of money and did the same thing in both markets, where would you be? And I said, I think my ability to create impact here,
Absolutely.
there is perhaps no greater joy
Yeah.
than 28-year-old woman coming up to you at the airport saying she's seen your story or read your post, and that inspires her to build a career in financial services. I don't think I would have got that in the US. I don't think
agree.
there's a greater joy than that.
I agree. No, I think the bar in terms of how much more is to be done in India
It's so high.
Yeah. It's just amazing that, like you asked me, why did you suddenly start this podcast? And it's a similar thought. The fact that you can influence thousands, if not millions of minds to start thinking in a certain direction is that power tool you won't have.
It's a power, it's a privilege.
Yeah, it is.
It's an absolute privilege.
Is a pleasure. That pleasure is a privilege as well.
It's an absolute privilege, and that you could only have here.
So switching gears to like what Forefront was about.
Yep.
So, and I know you started it with Nalin, who I've also had a great relationship with and I've met many times. Not as often since the pandemic. I've not been doing the interviews as well. But we have this debate around, do husband-wife teams work? And I would sadly say that the track record is more against than for. Because, but that's true of all startups.
Yeah.
You only have 2 or 3 great success stories. So it's probably the same ratio, but because it's easy to pick on, people pick on.
It's an easy one, yeah.
So people say, oh, these things never work, right? There are decisions around complementarity. Why did you decide to work? Is it a skills issue? So what are some of the pros and cons?
So I don't think it's an easy answer, by the way. I wouldn't portray it as very romantic. I mean, in large part, I agree to what you say. I don't want to give a very romantic notion of it. We were Nal and myself and actually a third founder. So
that's right. You had a third founder.
So sometimes having a third founder also is a good balance in the equation, the husband-wife equation. Look, I think for Nalin and I, we had worked together quite extensively in college. So we felt we had always been good teammates in that sense, project mates, etc. So there was a little bit of history. I think the good part of being a husband-wife team is a certain amount of empathy. Even 2 people in the same profession, when you come home late at night and you're in a bad mood because the market's had a really rough day, you don't need to give explanations. So your crises are understood, your joys are understood. I think that is the largest benefit. You don't need to explain a bad day or a good day or your stress. You can share that. So you don't need to do context setting, which is lovely. I think what is challenging is there is truly no separation at home. So you don't come home to it is there more than subliminally.
Overtly.
It is there on the dining table also.
Yeah.
It is there every day.
Yeah.
So it carries over because we are human beings. Now, when I come home to my 15-month-old child, nothing carries over because he lives in a different world.
Correct.
But when I come over to a spouse in the same profession, everything carries over. For us, actually, this is an interesting point. Because our professions have been so similar,
Yeah.
we found that having interests that were very diverse. So our personal interests are completely the opposite. So you have to, if you are going down this route, you have to find some space that is different. In fact, when the acquisition happened, and I always joke with my bosses about this, they decided to put Nalin and me in the same cabin.
Okay.
And we have never sat in the same cabin. And I was frustrated as hell.
Yeah.
And one day I told my bosses, I was like, can you please get us out of the same cabin? They're like, we thought you're husband and wife, you want to share. I'm like, no, we want space from each other because we have to go back and share a house.
Yeah.
So I think finding points of space is extremely important.
Yeah.
Finding what X will do and what Y will do and the boundary lines is also super important.
So what scale did this business get to? I'm getting to Edelweiss in a second, but maybe 5 years before the Edelweiss event happened. So how were you building the business? What was the thought around the same compounding journey that you've built into Edelweiss?
Yeah.
What would it have looked like as a standalone journey? And at that point, maybe before you started talking to them, we'll come to how that happened. But what would your mind have been? What was the dining room conversation then?
So it started with the objective of being an alternative asset management boutique.
Yeah.
At that time, private equity existed, as you well know, real estate existed, but there weren't too many alternative investment boutiques. I should tell you a funny story. Even when we were looking at coming back and looking at the regulated asset management structures in India, at heart, I wanted to run a mutual fund platform. But then we saw the capitalization and we said, there's no way we can afford this. So at heart, I wanted to run retail. But retail wasn't a possibility. The rules didn't make it a possibility. So we decided to cater to a much more high net worth market. And the ability was to bring a different style of investing that we had learned overseas to the Indian market. That business started at literally the minimum you can start an asset management business at, which was 25 lakhs.
Yeah.
Raised, as I said, from friends, family, and fools. And it scaled to about 200 crores, which even today is a reasonable size asset.
Were you structured as an AIF?
We were structured as a PMS and then became an AIF.
AIF came on only in 2012.
We were the first Category 3 AIF in the country.
I can believe that. We were the first, I think, Cat 1 AIF.
There you go. And it was such a high at that point because we worked with SEBI a lot more on Category 3 AIF regulations. And there was all this press that a bunch of 24-year-olds are India's first hedge fund. So
I recall that, vaguely.
And,
because there was no Category 3 yet.
There was no Category 3. So we helped co-construct the regulations around leverage and what the circular would be. That's another great part of building in India. You really get to build.
By the way, as you know, I represent the industry as
IVCA.
As the IVCA chairperson.
Yeah, I think Nalin looks at the Cat 3 council.
Yeah, there you go. So we get that voice which would have never got elsewhere. Suddenly get called to parliament to give testimony.
Yeah, there you go. So you get to shape policy here, which is also an interesting, thing. And, I've done much more of that in my Edelweiss stint. But yeah, so we scaled to about 200 crores. I sometimes do think if the business had continued, what would it have become? And it continues in the Edelweiss umbrella. Yeah. But I think the alternative investment industry has grown much more since then.
Scary growth in the last 5, 7, 8 years.
1, 2, 3, and I still think it's not even a teenager.
That's right. I agree.
So all asset management and financial services businesses in India, and actually to a certain extent, most businesses benefit from this under-penetration.
Yeah.
So if I look at my current business, it's about 15% AUM to GDP. When the world average is 80%, alternatives will be even lower. So I think all good businesses in asset management will scale.
Yeah. You just have to build the foundation to be strong.
You have to build the foundation.
And the nature of the business is that they are multi-decade businesses, right?
They will only be successful. The game starts at 5 years.
Yeah. So remarkably, our stories are similar in the sense that I had spent 5 years more. I didn't start on day one, 4 years maybe. And then Blume started. But then when we started, same thing. We were the last of the DVCFs to close. And then almost the first of the AF Cat 1s to open, right? And so we were probably at the same 150, 160 mark when you were at 200. We haven't obviously grown as much. It's not easy to manage that kind of capital and doing venture capital. But we also got, if you do a throwback to 2012, 13, even as we were getting started, we got offers to sell half of ourselves. And it was tempting because the pain of raising capital for, at least in your case, it was liquid, it's market oriented. For us, it was like, oh, we won't give money for 10 years. And they're like, are you kidding? Who are you? Get out of the room, right? And so it's been slower, but I think for us, the trade was useful because you want to be in control of your investment decisions. Yeah. There's a significant role played if you give up that control. And it's not very common for asset houses in our business to come and buy another asset house.
Well, that is one of the challenges of asset management, that I felt even then. In fact, at some point in my forefront journey, we were looking for funding.
Yeah.
And this is not a business where someone will conveniently take 5-10% stake. VC,
That's
so
right.
of course, someone told me nobody wants to have a conversation
That's
with
right.
you, or back then at least they did.
That's right.
So this is not a traditional, founder business.
Yeah. And so therefore, maybe walk us through how does a conversation like this even materialize? So did you just get noticed because you were doing a lot of great work and you got an inbound from, Rasesh and Venkat, who were building a great organization, to say, we need someone like Radhika to come and lead this? Or how did that happen?
No, it was actually quite the opposite. We had a partner who wanted to exit. Nalan and I also felt, and you made this point about raising capital. Even though we're in a liquid markets business, at that point, 2014 hadn't happened. But we felt we needed a larger platform to scale the business with. And so we actually went through a formal banking process.
Oh, really?
Yeah, we appointed HDFC Bank as a banker. And as you know, Karthik, selling an asset management business is very different from selling a tech business, because the founders, much of the value lies in the founder.
That's correct.
So you can't run away.
Yeah.
Right?
Yeah.
And so you're also evaluating a prospective acquirer, not just for the financial terms, but for the fitment and for potentially 3-4 years of a career afterwards. And keep in mind, we had never worked in India. So firstly, everyone dissuaded us from selling. Everyone told us it was a horrible idea.
Yeah.
I still joke with Rashesh that people told me I would be eaten alive. I'm still alive. Nobody's eaten me. And we met about 9 people.
Yeah.
We met larger corporates than Edelweiss. We met smaller ones. We met family offices. And I think and by the way, there's a joke that when our banker said Edelweiss, I said, nah, no, they're too aggressive, they're different.
Yeah.
And he was like, but actually I feel the cultural fitment is just right. And that's actually what happened. In the first meeting, I realized these are probably the right guys. And that's how the conversation happened.
So you went through a Swayamvar, you found the nice match.
Yeah, you found the nice match, the one that you didn't think would work out. It was all very filmy, and here we are.
And the feeling of, and I know you were mentally prepared, but going from working to becoming your own boss, to then saying that, no, now I don't know if I'm giving up control and I'm owned by them. How was that? And did it change very rapidly? And maybe to the credit of Rasesh and the board, you're still here. But how did that journey go? Because I think a lot of founders, when we are giving advice 5, 8, 10 years in, it might not be a bad option to go and be a part of a larger strategic. These are the biggest worries. So, for example, I'm actually having these kind of conversations with half a dozen founders who've put in 10 years.
Yeah.
And we think, ironically, they've actually reached the beginning of the compounding journey. So the next 10 years can be very fruitful, but the old investors are jaded and want exits, and the new ones are not necessarily jumping in, and they're probably a tad short of an IPO. And so we're saying, why aren't you considering a good Swayamvar again? Right? And so I'm trying to inspire them perhaps, or give them tips. And anything from you would be great.
No, I think quite a few thoughts here, because one is, I think, as I said, the world tremendously scares you if you're contemplating a strategic sale, especially if it's to a strategic. If it's to a couple of family offices, people tell you that you'll retain control.
Yeah.
But if it's to a strategic, you're convinced that you're going to give up independence and control. And this whole, you are going to go from being your own boss to working for someone. I don't buy this nonsense, because the reality is, whether I ran Forefront or whether I ran Edelweiss AMC, my boss is my customer, it is my regulator, it is my stakeholder, it is my investor.
That's correct. You're still answerable to all of those stakeholders.
Nobody lives a life when they're not answerable, because then you're not building a business,
That's
I think for all of us, we're first answerable to our customers. So I don't believe that.
Yeah.
I do believe the fitment of the strategic is very important. But I should tell you, when we sold the business, despite all the wisdom and preparation, the day we crossed over from our Worli office to this office in Kalina, I was on tears in the ceiling. I was just on tears when we were taking down that board of Forefront Capital. So
it's a big emotional decision.
it's a big emotional decision.
Yeah.
But I think the system made me feel very comfortable. In fact, there was a party that night that the team had hosted on the terrace here saying, welcome home, nothing has changed. And it really felt like that. I should also say, for me, the transition to a strategic into Edelweiss was not an easy transition. So I don't want to make it sound like a honeymoon. I had never worked in an Indian corporate before. When you are a founder, one of the good things about being a founder is nobody does performance appraisals. Nobody gives you too much feedback, especially if you're a bootstrapped founder.
Yeah.
And that transition is not an easy one.
Yeah.
One of the things Rashesh and Venkat told me is that it will take 3 years.
Yeah.
It will take 3 years to feel at home. And somehow at the 2-3 year mark, I started feeling at home. And once you start feeling at home, this whole notion of founder versus non-founder, I always say entrepreneurship is a state of mind. It's not a state of employment. If you incentivize the right way, which I truly believe I am, you will create value. And as I said, a lot more opportunities have emerged.
It's fantastic to hear. So a lot of takeaways. I think the 2-3 year one is a good takeaway. So people have to be patient on both sides around acquisitions, which we don't see.
Yeah.
Which is why I think 8 out of 10 of these fail, actually.
Exactly.
And the fact that you've been not just retained here, but you've been given that sense of continued entrepreneurship is a very powerful paradigm. Because without that, you will feel like I'm constrained by the boundaries of how they see employees, or even if they're good at culture and leaders. The welcome message is a great touch. I think that it is celebrated. I'm not saying founders don't do it. And as I was thinking, what you're giving is fantastic tips for even our companies which look to acquire others.
Yeah.
There's a way to make these work.
There's a way to make these work.
Now, it's been almost 10 years now with Edelweiss.
Yeah, 9 years.
And, they've been building for 2 decades prior to that?
Yes, 25 years.
Crazy. So what do you think has made Edelweiss what is your outside-in view? And now you're a part of the system and so to speak, part of the leadership. What makes Edelweiss click?
That we are still a company run by entrepreneurs who's letting people build as entrepreneurs. That is the number one thing that makes Edelweiss click.
It's kind of, you took the words out of the conversation that I have with my people head, Ria, that if anyone looks or smells like a job seeker, please don't hire. Because we only want a company run by entrepreneurs at every level. Because we're a small organization.
Yeah.
But lovely to hear that.
No, sir. I mean, Rashesh and Venkat are entrepreneurs. And we've always been treated, it's one of the things, financial services is a very ageist business. But if you look at most businesses here, they have had first-time CEOs and very young CEOs. Most of us became CEOs at 31, 32, 33. It does not happen in financial services. When I became the CEO of the mutual fund vehicle, and mutual fund is a highly regulated, highly public business. And I knew this coming in. I became the CEO with a lot of support and a lot of freedom from my board. And my peers are, at that point, were 20 years older than me on average. So it's a big decision. And I was not the only one.
Yeah.
So it's a group of people that likes the misfit, that likes the entrepreneur and backs the entrepreneur.
Yeah.
And it's a group of people that gives us so much freedom. So in this building, there is no notion of a group.
Yeah.
EFSL, which owns Edelweiss Mutual Fund, is like a private equity or a long-term. It's an investment company. We think Edelweiss thinks of itself as an investment company.
Understood.
That holds businesses for periods and creates values. I report to a board. When I bid for a mandate called Bharat Bond, which later became transformative.
Yeah.
It's a high-profile government of India mandate, all of that stuff. I didn't have a conversation upstairs कि मैं ये करूँ या ना करूँ, should I do this? In fact, most people found out after we won the mandate. And that is the kind of operating freedom we have.
It's awesome.
To build, to decide, to fail, to try again.
Yeah, people don't attribute these qualities to necessarily, quote unquote, the corporate. And
yes.
Clearly, you're not functioning like that.
Yeah.
Which is fascinating to see.
Yeah.
And it's kind of also my motivation to say that Indian stories come in lovely flavors and varieties all across, and not enough are told. We are like, we are either bracket is corporate or bracket is cool startup, and there's a lot of stuff in between.
And a lot of Indian
which blend the
corporates
best of
are
both.
bracketed as Lala,
That's what I meant.
which I don't
Yeah,
get.
yeah.
And I always say within this firm, I not only became a first-time CEO, I became a first-time stage host. I became a writer. I did my first podcast.
Yeah,
I did my first TEDx talk.
that's awesome. Great to hear. Without getting too much gory detail, I'm sure there are a few setbacks. I mean, just to give a flavor of what could be the pitfalls. I mean, post in these journeys within a corporate.
In post-acquisition, I think fitting into a corporate structure for someone who has not been part of it is tricky.
Yeah.
It is tricky
Yeah.
because there are layers
Yeah.
and there is process, and agility sometimes is not what it is in a founding firm. So I think working through those layers, and I've seen it can be challenging for a lot of people who come from a founder mindset. So again, I don't want to be romantic about it. That transition is not an easy transition. I think I went through 18 months. I was crying tears in my first performance review here, despite doing extremely well. But I just struggled with the cultural fitment. So I don't think the transition is easy.
Fair. So coming to how you run
Mhm.
your shop and the beginnings of which I'm going to touch on, the whole idea of compounding. So two things. One, of course, someone dug up that you mentioned that your team mantra is chappal gisso.
Yes.
What does that mean? And how do you execute a mantra of that nature when it actually has to be translated to people in reality?
We're currently doing chappal gisso, doing a lot of travel. But I'll tell you, and I'll give you a little context to chappal gisso. So we started building out the retail franchise in 2017, 6 years ago. And mutual fund is a highly fragmented industry. There are 45 players here.
Yes.
A lot of the large players are big bank-backed names.
Yeah.
Now, if you are a big bank-backed name, I think financial services is a business of trust and brand,
That is
especially asset management.
Absolutely right.
Brand sells more
I'm
than
giving you
anything.
money, so it has to be trusted.
Yeah,
right?
and when you're talking to the common consumer, SBI has a branch even on the borders of India and
That's
Bangladesh.
That's good.
Edelweiss cannot be pronounced on the borders of India and Bangladesh, less known be loan.
Yeah.
So you don't have brand, you don't have reach. And I quickly realized in this business, nobody cares about you when you're ranked 37 on a 45-person league table. So standing out and building a brand in retail financial services with limited budgets is a Herculean task. I've done the same exercise in institutional, but at least that you're catering to an audience you can talk to.
That is good.
Here it's a B2B2C business and you're catering to someone who's giving you a 500 rupee check.
Yeah.
Very, very different.
Yeah.
And you're doing it without a lot of funding.
That's right.
So chappal gisso came from a conversation I had with people in the investor community like yourselves who would ask me in the early days in 2017, 18, and you are ranked this, that. What is your edge? You know how they ask these questions in boardrooms. What is your edge?
Yeah.
Is it going to be some big strategic choice you're making? Is it going to be X, Y, Z? And the reality is, I don't believe in an industry as regulated and commoditized as mutual funds. You can make very large strategic choices. I do believe
That's true too. Yeah, it's like, how do you differentiate? Yeah.
The products are known. The pricing is known.
Everything is known.
And I said, hum chappal zyada khisenge. Which basically means we will work harder.
Yeah.
We will do more outreach to distribution partners. We will be more responsive to customers when they have a problem. The CEO will be accessible on social media if you have a question. The team will just be out there and do more. Hum chappal zyada ghisenge. That is going to be our edge.
Yeah.
Because we are hungry. And sometimes I believe hunger is enough. We're doing a product launch as we speak. And someone told me that for once, we don't feel that we have to push your product. People want to sell it because your guys are just there everywhere. That's how you drill hunger. And to your point of how you drill chappal gisso in a retail organization, because in a retail organization, messaging is very important. Taking a message sitting in an office in BKC or Kalina down to someone in Raipur who doesn't see you at all once a year is a hard task. You only do it by role modeling.
And what has worked for you in terms of role modeling and communication? Because I see a lot of parallels, of course, in multiple startups, but even at Blume, I think that's kind of, I would like to say that's an edge.
Yeah.
But how do you culturally sort of drive that message through to the foot soldiers?
I think three things. Being very visible. So in my first year, I probably met 2,000 channel partners one-on-one or in one to small groups, just traveling. So being on the ground and being visible. I mean, I still have an objective. I have a young son that I'm going to travel to every branch every single year.
And how many of these exist?
We used to have 8. We have now 32.
Oh, wow.
And many branches multiple times a year. Just being on the ground is so important.
That's phenomenal leadership.
I was talking to someone who is in the business of election forecasting yesterday.
Yeah.
And he said, what does a successful politician do? Understand the needs and be out there.
Yeah.
Not only so that they know him,
Yeah.
he or she knows them. And he says the same is true of any business. It's about understanding your customer base and them knowing you. क्या आप हो वहाँ कोई
Yeah.
problem है रायपुर के बंदे को,
Mm.
that CEO is there to listen. So I think one, that.
Mm.
Second, keeping limited messages
Mm.
and not changing your messages. This was a big learning from me because
Mm.
in my wholesale and institutional avatar,
Mm.
you can change messaging very quickly.
Mm.
In retail, I've realized it takes, you decide a message today here.
Mm.
It takes a year to percolate down the system, to your system, truly.
Mm. Mm.
And it takes them another year to percolate it down. So having limited messages and keeping consistency of those messages. I heard something from HUL that said, it's taken us 13 years to say daag achhe hain, which is a well-known campaign. And we're still saying daag achhe hain because India has changed. But that message takes time. So less messages and the same consistency of messaging. We're very careful about our messaging,
Mm.
what we want to say, and changing it is, it is a really big decision. We change messaging once in 3-4 years.
Mm.
So that is important.
I had a question later around your sort of drive for personal branding and
Yeah.
leadership branding. And I think you've already answered that in some sense on why it's important.
Yeah.
Because everybody needs to see you at the helm.
Which is my third point also,
Yeah.
is that as leadership, you have to be accessible. So breaking down barriers.
Yeah.
I really do believe that even though we have cabins,
Yeah.
I am accessible for problems because in an investment business, we are also a fiduciary. People should be ready to talk to you.
Yeah.
I always believe that in this business, you will realize compounding if you stay in the game.
Yeah.
The biggest worry I have is that you'll make a big mistake and get out because it's a very public business.
Mm.
And your people know when things are going wrong on the ground. So if your people talk to you, you don't have the risk of getting out of the game. And then you'll enjoy compounding. You stay in the business, you'll compound.
Awesome. I think you hit that, taken that into hit that stride at this point, and your chappals are striding now. So now to the compounding part.
Yeah.
The third section. So in the last 5 years alone, it looks like your AUM has grown 10x.
Yeah.
So, there's in each of the businesses we've interviewed this year,
Uh-huh.
there are these magical moments,
Yeah.
like, of how, as you said, undifferentiated, young,
Uh-huh.
AMC, crowded market, numerous incumbents. Like, what suddenly takes off? Like, how's that? How do you explain that sort of takeoff moment? And if you can correlate, maybe what happened before and after that, because this business is very different from the other ones that I might have had
Yeah.
on the show.
So I don't think in the AMC business, while you experience the compounding later, you put in the inputs
That's correct.
today.
Always.
And
yeah.
if you put in the inputs today, you'll get the rewards 2 years later. If you don't put in the input today, by the way, you will see the impact 2 years later. So that's also equally true.
Mm.
So if you have a period where you slack off,
Yeah.
I promise you in this business, you will see
You'll
the impact
struggle.
in the year because your connectivity will go down with people, you will get slack, and suddenly business will start falling. So most people who look at our trajectory, they will say Bharat Bond was the takeoff moment in 2019.
Mm.
I don't think that was. I actually think it was when we went through a crisis in 2018. The credit crisis happened. It wasn't the easiest time for the parent. And people literally told us we would die.
Okay.
Till then, we were an asset management company looking at what everyone else did, trying to find our feet, but looking at the market. I think in 18, we were forced to find an innate self-confidence that screw everyone else. we are going to do what works for us, and
Mm.
it doesn't matter what people say.
Mm.
That change in attitude happened in 1819.
Mm.
It led us to bid for things like Bharat Bond,
Mm.
which became a runaway success. So Bharat Bond was India's first corporate bond ETF.
Mm.
5 asset management companies applied. We were the smallest. When we bid at the bidding center, someone told us, why are you guys even trying? You won't even be able to manage this if you win.
Okay.
And there was a lot of press about why is a small asset management company trying to, win a state mandate.
Mm.
And we won.
Mm.
We did Chappal Ghiso, and I did 50 trips to Delhi that year. And we built out this product. It became a 50,000 crore franchise. All of that happened. The brand changed. Everything happened. But it came from an innate sense of we're not going to follow what the market does, and we are going to play this game our way.
Mm.
The same trajectory with Bharat Bond was repeated in a lot of products. And within our parameters, we started becoming a very innovative asset management company. So I always think it's the change in confidence, and the products are an outcome.
No, well said. I think the reason I'm pondering over it is because obviously you draw correlations between what you've heard from other guests in your own journey.
Mhm.
So I think you're absolutely right. It resonates very well with what we've been going through as well. People didn't see us potentially break out and get to this size that we've got. And it surprised the hell out of people that we had actually raised so much money in our fourth fund. And I think some of those, all the cues that you gave, the effort was put in long, long ago. If you took the brake off the pedal, you would have just slipped entirely.
And that's the risk today too.
Yeah.
It is complacency is the biggest risk in the business.
And so, flip side of this rapid growth.
Yeah.
I mean, we also contend with it.
Uh-huh.
Suddenly you went from, just to give you a parallel, we were 5 years ago, same day if I was meeting you, 2018, we were 80 million under management. And now we're 650.
Oh.
Yeah. So it's pocket change compared to what you do in the retail market. But I'm just saying, from a responsibility of capital and the team that you have to manage, it's a sea change.
Uh-huh.
And in your business, which is not apples to apples, but still curious to know what would then worries you about this staggering growth. Because performance is still demanded of whatever size of assets you manage in the asset management business.
So I think a few things, and no one's asked me this question, but in our first 5 years, we set out on this path that we want aggressive growth because we need relevance in this industry. I also know beyond a point, you will never be the fastest growing. There was a point, Karthik, where every quarter the league tables would come out and we would be the fastest growing one. Every single, and it's so energizing for people.
Yeah, that's right.
Last year, we took a turn and there was a major change in taxation. We were a very prominent fixed income AMC, fixed income taxation changed. And we decided our heady days of growth are over. We want to focus on depth and retailization. So sustaining growth is part of the journey. It's not the end in itself. And that's, to your point around communication. After 5 years, we had a change in communication to the market and our own employees that you're not going to see us being the fastest growing ones on the league table. These are the new metrics we're going to measure ourselves against. And now please track these. So one is that growth is not always sustainable. Two is, as I said, complacency. I think the easiest risk in the AMC business is to say, I've become top 10, I've become top 12, I've become complacent, main bada ho gaya hu, and I will stop doing the things that made me get here. I will stop chappal ghisoing. So that risk that you'll slack on customer issues, that you'll slack on performance, that you won't go out and meet your distribution partners, that complacency is the biggest risk in the business. And third is the visibility that happens when you're large. So when you're small, you can grow quietly.
Yeah.
But in a business as public as this, when you're large, you get a lot of scrutiny and the cost of failure is very high.
That's right.
And in a markets business, failure happens.
Yes.
Regulatory failure happens.
Yeah.
So I think the challenge on just managing risk, reputation, one of the aspects of our business that people don't know I manage most carefully is brand risk, reputation risk, and PR risk. And I look at that myself very, very close.
I think the best of founders in every business, not just financial services.
Yeah.
The one trend I've seen in all my top founders is that they never lose sight of that.
Yeah.
Because it drives not the risk of regulation and customers, but also how your employees see you, what talent you bring in. And these are small things around compounding, which brings me to the question I have for almost all my guests, which is,
how do organizations compound? This is an abstract question, I know, but I think it's important for everyone to hear, every different perspective that I can gather, only because without that, I feel it's almost impossible for long-term building, which is the idea I'm trying to propagate here. And so, when you were a young CEO, you had a whole bunch of potentially, I think, very young L1s who were also first-time sales heads, first-time CXOs.
Yes.
And did you have to do something consciously for culture to compound for this? You referenced entrepreneurship multiple times. How do you compound that element? I mean, it feels like it's impossible to hold on to after a certain scale and after a certain point in the organization's life.
It's a very relevant question because, as I said, you'll get the delta in this business if you hang around long enough. And at least the retail asset management business is about consistently doing the same thing day after day and not stopping doing it. And so how do people not get bored is really a question. And how do I not get bored? I think you have to find new vectors to challenge yourself and make things interesting for yourself and people. So, we went down a growth journey. We're now going down a deep retailization journey, taking the brand. And I think you have to translate what each leg of your journey means to people down the line. Because I got this feedback in my early days that aap kehti ho 1 lakh crore ka banda hai, you say we want to become. What is in it for me? What does that mean for me sitting in Patna branch? And I think you constantly have to answer the question that if this is what the next 3 years for the org means, this is what it means for you and this is what it will deliver for you.
Yeah.
This is the benefit. Why am I here?
Yeah.
What is my innate sense of purpose? That's how you preserve that sense of culture.
And other than doing the Gissoing and landing up at all these branches, what have been your favorite communication tools for this?
My favorite communication tool is a simple one. It's called Leadership Connect. It's a very boring name. But every 6 months, I catch up with every department in groups of 5 or 10. And I don't speak in that tool. So I come and they sit in this room or, virtually if it's a branch, and they just pound me with questions. We started this in COVID. And all I do is I list the questions and I answer them. Now, in the early days, Karthik, the questions were all very strategic and, top level. Now the questions are as much as, oh, I've heard you're going to quit. Is that true? Oh, this is a problem. And my board is much kinder to me than my own guys are. So we have town halls and we have emails and all of that.
It just builds from the top, a sense of transparency and comfort that you can question anybody on anything.
You can ask questions. It's a place that you can ask questions.
Yeah.
The CEO is there.
Yeah.
She's accessible. You go ask your question. And so people ask. So that has been, I think, our most successful one, outside. And you don't realize, your smallest tweets, your smallest LinkedIn posts, people read into all of that.
Yeah, they do. They read between the lines. They read everything.
They read into if you walk onto this office with a smile on your face or an angry mood, there's a conversation about it.
In your book, Limitless, your second chapter had a funky title, Taking Risks, Understanding Sips and Surviving Blips.
Yeah.
And you go deep into your take on risk-taking. And we all kind of heard about what the risk-reward equation means.
Yeah.
But how do you think about risk and its need and its essence for compounding? Can you compound without taking risks?
I think you need to take the right kind of risks to compound. I'm in the investment business, and investments is about taking the right kind of risks. If you don't take risks, you get FD returns.
Yeah.
So you have to take risks.
Yeah.
We have to take risks with business. We have to take risks with investments in the business. We have to take growth risks. What I don't want to take is brand risks and franchise risks.
Yeah.
And so the lines I think that sum it best are the ones I learned here. Is it worth it, which is my growth risk? And can I afford it, which is my franchise risk? And so there's a kind of risk I want to take and I have to take.
Yeah.
But there's a kind of risk. Like a new product I launch and it fails, that's a risk I damn well take. Something that questions the reputation of this franchise, I'll never take it.
Understood. And maybe the last question before I get to a little bit of a fun rapid fire is, I guess the biggest idea around the theme of compounding is to show there's incredible value to be built after the business is brought to a certain
stable state, which
Yeah.
de-risks all of what you just said in the last answer. But that's a 8-10 year journey.
It is.
And there's incredible short-term pressures on performance, capital raising, speed, how do you keep people engaged and interested for 10 years before you can sell all of this glorious vision, right? What are your advice for founders, like, having lived through this journey, balancing the short-term performance, profitability expectations, long-term sustainability?
You mentioned the acquisition. When I joined, and I wasn't the CEO of the retail business then, but I was watching it. When Forefront was acquired, we were a 200 crore business. And on the 6th floor, this asset management company existed. It was a 100 crore AUM MF. I mean, that's as small an MF.
That's as small as you can get, yeah.
We're sitting here 10 years later at 1,15,000 crores.
Amazing.
And also a journey that is less documented, from heavily loss-making to meaningfully profitable, and hopefully on our way to an IPO in a few years.
Oh, lovely.
Last year in my annual report, the theme was strong foundations mean sustainable growth. And I think that is the balance we tread.
Yeah.
You have to build business on foundations that are strong. We are also, not only do we run a business, but we invest in companies every day. And I think the same criteria that we look for in companies applies to our own business. Building strong foundations, doing business a sustainable way. In every business, there is an opportunity to take shortcuts every day for exuberant growth.
Yeah.
And it's those questions and those choices that you make. So I never want to overhire and lay off people. It's just something I don't want to do.
Yeah.
I never want to sell products for negative unit economics. And I never want to do anything that compromises the franchise.
Yeah.
I think those are the foundations you need to build for sustainable growth. And in finance, Karthik, we were taught that there is something called terminal growth rate after 10 years.
Yes, correct. That's how the DCF formula works.
That's how DCF works, right? In India, there is no terminal growth rate. That's compounding in India. Do you think HDFC Bank will stop growing after 20 years? So India, the definition of terminal growth rate, our economy is going to have a demographic dividend till 2050.
Yeah.
So we don't have to worry about terminal growth rate right now.
I think that's the biggest takeaway from that answer, is that maybe people are badly analyzing, this need for short-term gains and like artificial rewards while parking. I think it's a message not just for the founders, but also for the venture capital.
Yes.
That you got to build differently in India.
Yeah.
And this arms race to try and get most capital and some, valuation which doesn't hold water in the first 5-6 years is going to punish and destroy the possibility of that compounding between years 10 and 20. That is a worry because everyone wants to cash out in 10 years.
Exactly.
Yeah. And that is probably the biggest flaw in the model.
I've had this debate with my board, and I'm like, sometimes you have this thing as a CEO, or we rank 10 or 11 or 12 or 9. And he was telling me, Rashesh, that, in the asset management business, if the opportunity is so large, you will build a business of serious value.
Significant size.
Growth is assured, focus on quality.
Super. Now that we'll wrap on that, and I'll just have a short section on rapid fire questions. Maybe a word, a phrase, a sentence that the team has put together, a bunch of questions for you. They're not similar for all of our guests, but here, let's go on that. Yeah. So the first is, what's the most important thing you look for when you or your colleagues hire somebody at Edelweiss?
Hunger.
You do over-index on hunger.
Hugely over-index. Hunger hai to sab hai.
Super. What's more important, ambition or accountability?
Accountability, because, and I love ambitious people, and I just said hunger, but if you can't deliver, it's all talk.
And also in your business, I would say doubly so, perhaps.
Getting things done is underrated, yeah. Especially in India. Ideas are a dozen. Execution is hard, hugely underrated.
You already spoke about the effect of the Chappal Giso, but how many days of business travel? Probably every year?
Before my son, it used to be 3 days a week.
Okay.
Now it's about 2 days a week.
Super. What does a Sunday look like in the life of Radhika Gupta?
Sunday actually looks like hanging out with a 15-month-old, sleep, music, poetry, writing. That's it. I love to be home.
Nice. And do you write poetry or just read?
I write poetry. And if you see me in any of my presentations, my retail presentations, you'll see a lot of shairi come out. It's a great way to connect to people. So
Awesome.
I'm known for my shairi.
Any book or two that you keep coming back to?
Karthik, I have to confess, I don't read non-fiction books. I read a lot, but I read a lot of fiction. So I'll go to the airport, and because I also studied literature in college.
Okay.
So I'm crazy about reading fiction.
That's awesome.
So there are a lot of old fiction books that I come back to.
That's great. And thank you again, Radhika. It's I know it took a while to get this scheduled because of your crazy travel. But a lot of things I learned for the first time about you, your life, what drives you, and how phenomenal this journey has been. And as I said, I think each story is different. We all know that each entrepreneurial story is different. This one in particular excited me because not just because you're a woman founder, but also because you've sort of relatively male-dominated world, but also this unique journey of taking your dream, knowing that it can become a much bigger dream in a different home, making it work, not easy, and building one of the most formidable asset management business in the country. So congratulations again. Good luck for the road to IPO, and thanks for the time today.
Thank you very much.